All right, good morning. Traderfirstyear here with a new options position, 423.2020. It's an earnings bearish risk reversal. Traders will be short theta and long gamma profile. Expected outperformance from 423.2020 to 424.2020. Taking advantage of earnings events after market close on 423 and before market open on 424. So again, do not buy until 3:55 p.m. today. If you want to avoid the small print, the condensed version of the trade is pretty straightforward. It is a long ball, short front dated option, and a long gamma profile. End goals to make money on earnings jumps. Potential unlimited in profit. Exposure of about $12,000 this week is short dated funding to reduce cost of long ball position. A video is coming shortly. Do not buy until the end of the day before market close at 3:55 p.m. Again, traders are targeting a move after earnings are reported this afternoon, after market close and tomorrow morning. Volatility expectation on individual earnings announcements. I expect the following implied moves in the underlying securities. These are implied plus and minus moves. So FCX, which is Freeport McMoran, it's a very large implied move of about 11.3%. MHK, which is Mohawk Industry, is implying a move of about 15.8%. WWE, which is Worldwide Wrestling Entertainment, is implying a move of about 17.7%. So again, these are very, very large moves expected after their earnings release. And those implied moves are from 423 this morning of about 7:30. The full summary and rationale for the trade. The start of earnings season allows investors to take on what I will refer to as earnings bearish risk reversals. These give investors the opportunity to sell premium, to fund a long premium position, and attempt to profit from an earnings event. The market pricing around implied volatility during an earnings week, like earnings, leads to wider, elevated moves relative to historic volatility. The specific strategy will not be greatly impacted by implied volatility crush. These are purely 100% speculative, with no trader engaging in these trades with a clear absolute edge. Brief on trading suggestion. We will temporarily be returning to a period of elevated swings up and down, but there is more significant delayed selling likely to restart this week, as we've seen over the last couple of days. However, this overall market sentiment has relatively little impact on traders engaging in earnings plays. These are specific earnings picks where you stand to make a unlimited profit if you're right or lose all premium paid to enter the trade. Using risk reversals allows traders to lower the overall cost to enter the trade, but does not completely mitigate overall losses if wrong. There is no strategic rationale, which makes the payout similar to buying a lotto ticket. You fund the trade by taking an income to pay a premium for the unlimited potential profit to the right or left side of the distribution curve. The rationale for the trade, again, just refer to the brief. The risk for the trade, the risk is twofold. On the first funding leg, which could be offset by any large increase in realized volatility, which causes the equity market to move up more than 10% to 15%. The second leg of the trade, which is a long vol put position, faces risk if realized volatility falls or remains stagnant. If the implied volatility is substantially less than the realized, the trade profitability could be hampered. What we would like to see happen is realized volatility higher than what is implied on the position we are long, which are the puts, and lower on the positions which we are short, which are the short calls used to fund the position. Do not enter these trades if you do not want to enter into an event trade, which may require some quick management if the short position, the calls that you sold, move against you. The popularity of earning strategies is the low premium for large unlimited skewed returns to the upside on calls or downside on puts. Level 3 is required to write short naked calls. If unable to use level 3, if you hold 100 shares of the short position, you can sell a call with your stock equity backing up the portion of the sale. If you do not have the margin or ability to sell the calls, you just can buy the put and just pay the premium. So to enter the trade, it's pretty straightforward. For ticker symbol FCX, you sell the 424.20 expiration. You're gonna do the strike at 8.5. You're gonna collect 11 cents, so $11, and then you're gonna buy the 424.20 put at a strike of 7, which you're gonna pay about $16 for. So you have a net debit of about 5 cents. For Mohawk Industries MHK, you're going to do the 5/15/2020 expiration. You're going to sell one call. You're going to collect $360 because you're going to sell it for $360. These prices are again subject to change because when you put these in at $355, the prices are going to be substantially, probably vastly different than what they are currently at 7:30 before the market open. Anyway, MHK, you're going to buy the put at 70. You're going to pay $380, net debit of $20 for WWE. You're going to buy the 515. You're going to sell the 515 call to strike at 45. You're going to collect $139, and then you're going to use that to buy the put, which is an expiration of 5/15/2020. The put's at strike at 35. You're going to pay $180. The net debit there is $41. So total, if these prices were to hold consistently to enter the trade, is about 61.05. Major risk, again, I typically like to do an extreme level of shocking the underlying security prices up by 25% and then also shocking them down by 25%. So I'm only going to do the first shock of if the prices were to go up 25, because that's the major risk to the trade, is that you have to cover. So if Freeport tomorrow were to open up at 958, you'd need to cover a call at a loss. If Mohawk Industries, which is ticker MHK, were to open up at 93.82 tomorrow, you again would have to cover at a loss. And if Worldwide Wrestling, WWE, were to open up at 49.35, you'd again have to cover at a loss. For more information and for more stock information, you can follow me at StockTwits at Traderfirstyear. You can also Google Traderfirstyear, and a lot of information will come up. If you'd like the information and you want to see it on a more daily basis, you can become a Patreon, and just go to Patreon and search for Traderfirstyear, accepting donations. If you like the content and want to keep it coming, it's much appreciated. And you can also follow me on Instagram, which I'll try to start adding pictures and graphs to at some point in the very near future. So again, thanks for following, and good luck on the trade if you take it on.